If you live in a Western country like the US, Canada, UK, or the EU, you're most likely paying anywhere from a third up to a half of your income to your government every single year. To put this into context, that means that literally every year you work from between 3 to 4 months to up to 6 months or even 7 months for completely free just for your government. Now, maybe some of you are happy to pay that money because the services and whatever that you get in your country are worth it to you, but chances are, especially if you're a high earner, you could think of a lot of better uses for that money than simply giving it to inefficient government bureaucrats for them to spend it on public services that are getting worse and worse and worse every single year. Now, you might be shocked to hear that there are actually many completely legal ways to reduce your taxes potentially all the way to zero. In fact, just last year, I personally reduced my own tax rate from 40% all the way down to 0% by moving to a jurisdiction that has 0% income tax, which is the UAE. I want to make it clear that I am not a tax advisor. This is just for informational purposes only, and I'm just talking about the things that I have done myself personally that have worked for me in my situation, and that if you want to do any of this, then you should definitely seek out legal and tax advice in your particular country or jurisdiction. And before we get into the exact ways, the thing we need to understand about the tax system in almost every country is that the purpose of the tax system really is obviously number one, to collect revenue, but number two, to act as an incentive system. By imposing taxes on certain things, governments want to disincentivize certain things and incentivize other things. For example, in Singapore, there is a very high tax on buying a car. Why is that? Well, obviously it's going to collect revenue for the government, but the main reason why there is a tax in this thing specifically is because the Singapore government wants less people to own cars. And so if you understand that the tax system as a system of incentives, we will first of all, it makes sense why there are certain things that the governments have put into the tax system to give you as the individual or a business owner incentives to do certain things and not do others. The first of these is business expenses. Now, governments understand that it's useful for businesses to reinvest money into their businesses, which means that if you're self-employed or a business owner and you have any expenses that are related to you running the business, like for example, you buy a camera for, like, if you have a YouTube channel like I do, you hire employees, you hire contractors, all of those will be deductible from your final tax bill. Okay, that's pretty basic. I feel like most of you probably know that. So what are some other ways? Well, in most countries, you have something called tax advantaged investing accounts. This is a way for these governments to incentivize people to invest money. So they give you a special account where you can invest money every single year that has like a certain limit that you can then take out tax free later on. In the UK, when I was there, this was called the ISA. In the US, I believe it's called the 401k. And chances are that your country is going to have something similar. Now, there's many of these kind of tax exemptions and sort of tax deductions that are going to be available to you. But the thing to understand, if you want to really make use of these and you want to reduce your taxes as much as possible, it's very useful to make sure you become a self-employed / you run your own business rather than being a salaried employee. Because when you're a salaried employee, there's actually very few things that you can actually do to reduce your taxes, because your taxes are simply deducted directly from your salary. So you're just exposed to the entire burden of the tax system. Whereas when you're self-employed, there's many things you can do. You can deduct things, or you can keep money in the business if you don't need to pay all to yourself personally, and corporate taxes are generally going to be lower. That allows you to invest money inside of your company rather than having it all to your personal name. When I became self-employed, I noticed that there was suddenly so many more ways for me to reduce my taxes. But in any case, all of these deductions and all of this are really only going to make a difference when you're maybe on a low / a middle income, when you really wouldn't be paying that much tax anyway. So really, my view is that if you're in a low to mid income, like you're perhaps making less than $100,000, it probably makes most sense for you to stay in your high tax country, in your Western country, and just make use of a lot of these deductions, because at that level, the services and public healthcare, all these kind of things still give you a lot of value. And the other thing about these social safety nets is that, for example, in Europe, social safety nets and unemployment benefits and all these kind of things are so strong that, let's say you're still at the beginning stages of your business or online business, it's extremely valuable to have this safety net so that if things go bad, then you won't end up homeless or something like that, because you can access these benefits. So that will probably give you a lot of peace of mind to focus on growing your business and you're still not paying that much tax at the end of the day. But once you start going above this limit, you start earning perhaps more than $10,000 a month and things like this, that is when you really start to notice that tax burden go up. And also at that level, you're probably using the government services less and less anyway. That is when the next few strategies are really going to start to become more appealing, as they did for me. The first and simplest of these is just to move to a low tax country. This is exactly what I did. The United Arab Emirates has 0% income tax and 0% corporate tax. Well, from this year, they actually have a 9% corporate tax, but that's only if you earn more than around like $900,000 a year, which I'm not going to make this year. So for me and most people at my level, it's still going to be 0% tax. There's not many countries where you can get absolutely zero, but there are many countries where you can get maybe 10% tax or 5% tax or 20% tax, which is much, much better than you would be paying in the UK, the EU, Canada, places like this. Now, this works as long as you're not a US citizen. If you're a US citizen, you have something called citizenship taxation, which is an absolutely crazy thing. But basically, no matter where you live in the world, you'll still have to pay US federal taxes. In any case, apart from the first 105,000, I think, what you make, it's called the foreign earned income exclusion. I recommend looking into it. So if you make less than that or slightly around there, you can still save a ton from your taxes. But for everyone else, the thing to realize is that you're not forced to live in the place where you were born. Like, so many people are so brainwashed by the countries that they were born in that they think that they have some obligation to just live in the country where they were born their entire life. Of course, if you want to, that is great, you can stay. But many people nowadays don't want to do that. And they're starting to see that, okay, I'm running an online business or I'm doing online freelancing or something like that. There's so many places around the world that offer much more for a much lower cost. That is what I realized about Dubai. And obviously Dubai is not going to be the right solution for everyone, but for me, for many online business owners, it absolutely is, which is why so many people are moving here. But lifestyle aside, like, I think most people don't even quite appreciate just what an incredible impact saving on taxes is going to have on your financial future. Because the thing to understand about the way the tax system works in most countries is that you might think that the tax system is like this great equalizer that is like taking money away from the wealthy and giving it to the poor, which obviously it sort of does that, but in many ways it actually makes it harder for people to go from being poor to being wealthy. Why is that? Well, it's because the thing that these tax systems tax most heavily is not wealth, it is income, which means that if you're earning a lot of money and trying to get yourself out from being poor to being rich, the tax system is literally slowing this process down so much by taxing all of your income. Every single year, you could be having all of your money and putting it towards investments, buying property, things like this, but instead you're having to give half of it to the government, which makes that wealth building process so much slower than it could be. Which is why, like, this is especially important for people who are in your high earning years. Perhaps you're building an online business and it's just taking off. Like, now is the time when you should be focusing on reducing and eliminating your taxes as much as possible. If you have twice the amount of money to invest every single year, your wealth is going to grow twice as fast, potentially more than twice as fast, because you also have twice as much money that is then going to grow exponentially as you start investing it with compound interest. So what I would do is open your eyes, look at the world, learn about tax rates in different countries, learn about what it takes to move to those countries, and look at which countries for your preferences, and everyone's going to have their own preferences, offers the most for the lowest price. Now, if that country still is a high tax country and you just don't want to move, then obviously don't move if you don't actually want to live in those places. But I bet if you just open up your eyes, you look at the world, you shop for the best country, the country that treats you the best, I bet you're going to find that there are so many options that offer you so much more for so much less money. Now, the important thing here is that it's not enough for you to just move to that country and establish tax residence. You also need to make sure you properly exit your old country. Like most Western countries, they're going to have some conditions that you're going to need to meet. Like when I left Finland, my country of origin, I had to prove to the Finnish government I had no ties left to Finland. And for every country, what these ties mean is going to be different, but you're probably going to have to like go through some process to like probably exit the tax system of your previous country. Because if you don't do that, then it doesn't matter if you don't stay there. That country might still tell you like, yeah, you're still tax resident. We're still going to tax you. So definitely get in touch with professionals in both countries, your old country and your new new country. After that, you need to look at the rules of your own country to determine how many months of the year are you allowed to stay there. Like, let's say, for example, a lot of people who move to Dubai, they stay in Dubai maybe half the year, maybe 9 months of the year. And then over the summer months, when it's super hot here, they go back to UK, Europe, Canada, whatever, when the weather is nice there, etc. But you need to make sure you look at how many months are you able to stay in that country before they again would deem you a tax resident. If you want my help with Dubai specifically or any of this stuff, I have put a form below for a coaching call application. If you are interested, you can describe your situation, and if it's something that I have expertise in that I can help you with, I would happily walk you through the process and walk you through the exact steps in your particular situation, because all of this is so incredibly individual. But there's actually another way that you can potentially become completely tax free, even if you don't want to move to Dubai, if you don't want to move to perhaps Singapore or a couple of these low tax jurisdictions. In certain cases, and this is going to depend on your nationality, you might be able to be something called a tax resident of nowhere. Now, this is something that is probably not going to be, in most cases, is probably not desirable long term. But for example, in my case, when I leave Finland, which is my country of citizenship, all they care about is that I show them that I'm no longer a tax resident of Finland, that I don't stay there more than 6 months of the year, and that is not my center of life, essentially. As long as I can show that, they don't really care where I go. So let's say I go to Singapore and I spend a month there. Okay, a month in Singapore is not enough to become a tax resident in Singapore. Let's say I go to the US for 3 months. 3 months is not going to be enough to be a tax resident in the US. So as long as you don't stay in any particular country for long enough for that country to deem you a tax resident, it is potentially, again, not always, possible for you to just not be a resident of anywhere. You just set up your business somewhere. And again, when this works and when this doesn't work, it's really going to depend. You might be able to simply choose, let's say, 3 or 4 countries around the world and rotate every year around those places, or just travel around the world every single year and never be taxable anywhere because you never stay in any particular place long enough to be a tax resident. Now, in some cases, I know, for example, the UK is a country like this, where when you leave the UK, you need to be able to show to the UK that you have a tax resident somewhere else. Otherwise, the UK is by default going to assume that you're still taxable there and they're still going to tax you. So this doesn't always work. So that is why I stress that this depends on your nationality. So you want to make sure what are the exact requirements to leave your home country first to see if this is possible. And also, probably, for most people, this is not something that you would want to do long term. Probably long term, you'd want to settle in one place. But again, a lot of people have different preferences, so at least for a couple of years, this could be something to consider. So these are the 3 ways that you can first deduct your taxes in your home country and then potentially completely remove your taxes like I did personally. Like I said, everything depends on your situation. You can book a call with me, or if you're considering something that I haven't personally done, then probably don't book a call with me, book a call with an expert from your country or the country that you're going to. You almost have a duty to yourself, your family, your future family. Do not give all of your income to the government, who are probably not using it in very efficient ways anyway. If you're thinking about Dubai and you're wondering exactly how you can move there, then I made this video about my process of exactly how I did it. Again, if you want the details, you can book a call with me, but this is a high-level process of what I did. So if you're interested in that, go watch that video next.